I'm the finance manager here, and I'm going to be helping with all your legal and DMV documentation, as well as assisting you with the financing.
Okay.
Shouldn't take too long. While we're in here, we're going to have the guys out there washing it, fueling it up, and getting it ready to go for you, okay?
Great.
Wonderful, wonderful. By the way, congratulations. Now, before I ask you to choose, do you have any questions?
I'm just going to tell you that I can't afford that.
Which one?
Well, I mean, any of them. It's too much money.
Okay.
I can't fit it in my budget.
I understand. And I think I'm with you on that, right? We've already budgeted for $426, and we're talking about your payment being a little bit higher. If you would, just indulge me for a second, humor me. Can I present you an option here that maybe you didn't think about, a different way of thinking about it?
Oh, yeah.
Okay. So let's say, for instance, your payment's $426 currently, right? That's what we've agreed to. So if you're at $426, let's say that you have an unexpected repair in the next 5 years, right? We went over the averages. The average labor rate's about $100 an hour. Average repair is going to be probably around $1,200, right? So if something happens, you, your wife, whoever, kids are in the car, and you have to have a repair for $1,200. Well, the repair's not just $1,200 and you're in and out. Well, you're also making a $426 payment. The bank still wants their money. So the total cost that month for your unprotected payment and your variable payment would actually equate to $1,626, right? Because the bank doesn't stop collecting on their monthly reimbursement just because you had something happen. Right. And
Right.
You know, furthermore, a lot of folks believe, you know, I'll take the risk. Well, if your car was even 99.9% of the time perfect and nothing ever happened, let me show you this, just a little bit.
Okay.
If I take your loan, which is 5 years, right, 365 days a year. In fact, I'm going to let you do this. Multiply 365 times 5, and what do we get?
1,825.
Okay, so 1,825. Do me a favor. Multiply that times 0.1. Okay, so that's 1.825. That's representing the days. Would it be fair to round that up to 2?
Sure.
Okay. So let's say essentially over 5 years, there's only 2 days your car is down. That's 99%, 99.9% of the time you're running perfect in that car. So let's say it's down 2 days. Remember I talked about the average labor cost is about $100. So 8 hours a day is what technicians work. That's 16. So do me a favor, multiply 16 times 100 on there. What do you come up with?
1,600.
That's 1,600. Parts and labor. Parts are twice as much as labor. So multiply that by 2 for me. Tell me what you get. 3,200. Wow. Now, if we take 3,200 and add 1,600 to that, what is that? Johnny, if your car was 99.9% perfect, out of 2 days, you would spend $4,800. Now, wouldn't you agree it's much better to have a non-variable payment, something that's protected, rather than wait on a surprise?
Yeah.
Yeah, especially for less than $5 a week.
It's less than $5 a week.
Yeah, that's what it equates to, because you're financing it over the term, so it's less than $5 a week.
Less than $5 a week is doable.
Great, great. Now, would you like to go with 60 months or 66 months?
60 months.
Okay, and you want to do the gold, silver, or platinum?
Gold.
Wonderful.